Hello friends, welcome back to our channel SNK and Company. I hope you are doing well. Let us begin this week's detailed update on important developments under the Income Tax Act, GST laws, and other corporate and regulatory laws. These rulings have far-reaching implications for taxpayers, businesses, professionals, and compliance teams, so do stay with us till the end. We begin with key updates under the Income Tax Act. The Bombay High Court, in the case of Capgemini Technology Services India Limited versus Director of Income Tax, delivered an important judgment on delayed refunds and interest thereon. The court held that where the assessee was granted refund along with interest under Sections 244A1 and 244A1A pursuant to appellate orders, but such interest was not fully paid till the date of actual refund. The assessee was entitled to further interest. The court observed that interest is payable till the date of actual refund and that any delay amounts to unauthorized retention of money by the department. Accordingly, the assessee was held entitled not only to interest under Sections 244A1 and 244A1A, but also to compensation at the rate of 6% per annum for the delayed payment of interest. This ruling strongly reinforces taxpayer rights in cases of delayed refunds. In another significant decision, the Pune Tribunal in Gira Developments Private Limited versus Principal Commissioner of Income Tax dealt with depreciation on goodwill. The tribunal held that where the assessing officer allowed depreciation on goodwill without conducting any inquiry or verification, despite the goodwill having been fully impaired and reflected at nil value in the books of account, the assessment order was erroneous and prejudicial to the interests of revenue. Accordingly, revision under Section 263 was held to be justified to the limited extent of directing fresh verification of the depreciation claim. This judgment highlights the importance of due diligence by assessing officers, particularly in cases involving intangible assets. The Delhi Tribunal, in Deputy Commissioner of Income Tax versus MKF Logistics Private Limited, examined additions made merely on the basis of Form 26AS mismatch. The tribunal held that where the assessee was engaged in freight forwarding and handling services, collected gross amounts from customers, retained its service charges, and remitted the balance to airlines or shipping companies, no addition could be made simply because gross receipts reflected in Form 26AS were higher than the income declared. Unless it is established that the entire gross receipt represented compensation for services rendered by the assessee, such additions are unsustainable. This ruling provides relief to intermediaries and agents operating on pass-through models. In another important ruling, the Gujarat High Court in Principal Commissioner of Income Tax versus Madhya Gujarat Vaj Company Limited held that interest earned by an electricity distribution company on staff loans and advances was taxable as business income. The court observed that such loans were extended in the normal course of business and were integrally connected with essential business activities. Accordingly, the interest income could not be treated as income from other sources. The Delhi Tribunal, in RG Home Furnishing Private Limited versus Deputy Commissioner of Income Tax, dealt with additions made under Section 69C on account of alleged bogus purchases. The tribunal held that where the entire case of the assessing officer was based on suspicion arising from blank letterheads found during search, which were nothing but dumb documents, no addition could be sustained. It was held that making additions in assessments completed under Section 153A, read with Section 143.3, solely on the basis of such uncorroborated material was unjustified. Another important ruling came from the Delhi Tribunal in Deputy Commissioner of Income Tax versus Healthcare Limited. The tribunal held that where the assessee had claimed deduction for bad debts and CPC disallowed the same under Section 143(1)A(ii), treating it as capital advance, such adjustment was invalid. Since there was nothing in the return or books of account indicating that the amount was capital in nature, the claim could not be regarded as an incorrect claim apparent from the return. Accordingly, the CPC adjustment was quashed. Let us now move to key updates under GST law. The Allahabad High Court quashed an order passed under Section 74, where the state GST authority lacked jurisdiction and failed to grant personal hearing. The court observed that allegations of fraud and suppression were made despite the fact that the petitioner's transactions were duly reflected in GST returns, bank records, invoices, e-way bills, and actual movement of goods. The court held that survey-based allegations of circular trading without substantive evidence were unsustainable in law. In another ruling, the Allahabad High Court held that where tax, interest, and penalty were demanded in excess of the amount specified in the show cause notice, the order was contrary to Section 75, subsection 7 of the GST Act and was liable to be set aside. This judgment reiterates that adjudicating authorities cannot travel beyond the scope of the show cause notice. The Authority for Advanced Ruling Gujarat held that where an applicant, being one of the owners of a commercial building, leased the property to a company not registered under GST, and such company used the premises for providing residential accommodation to students or working professionals, the applicant was not eligible for GST exemption under Entry 12 of Notification Number 12/2017, Central Tax Rate. The ruling clarifies that exemption depends on the nature of supply by the lessor and not on the end use by the lessee. The Supreme Court, in an important development, issued notice in an SLP arising from a High Court order involving alleged ITC fraud in highway construction projects. The court observed that where search proceedings were conducted and a detailed show cause notice invoking the extended period was issued alleging willful evasion and fraud, a writ challenge at the threshold stage questioning sufficiency of fraud or limitation was not maintainable. This ruling reinforces the principle that factual disputes must be examined in adjudication proceedings. Finally, let us discuss key updates under other corporate and foreign exchange laws. The SAFMA authority at New Delhi held that resident individuals are not permitted to extend loans in foreign currency to foreign companies without prior approval of the Reserve Bank of India. However, in the same matter, it was also held that where the appellant had availed benefit under the liberalized remittance scheme, remitted funds to his Singapore bank account, and subsequently invested in shares of an overseas company within the prescribed limit of USD $200,000. No violation of FEMA was made out as such investment did not require prior RBI approval. With this, we conclude this week's tax and corporate law updates. If you found this video useful, please like, share, and subscribe to our channel, SNK and Company, for regular, reliable, and easy-to-understand updates. This content is purely for educational and informational purposes and should not be treated as legal or tax advice. Please consult your professional advisor before taking any action. Thank you for watching, and we will see you in the next update.